Hello everyone, this is Marshall Gittler speaking. Today I'm going to discuss the main issues facing the FX market in the week beginning 15th of January. The main theme in the market nowadays seems to be the reverse monetary policy divergence. It used to be that with the Fed tightening and other central banks on hold, the dollar was rallying all around. But recent comments by Fed officials have called into question the likely pace of Fed tightening on the one hand, and on the other hand, the minutes of the latest ECB meeting have raised expectations that the ECB, the European Central Bank, could begin its tightening process earlier than expected. As a result, the European rate expectations have risen faster than U.S. rate expectations over the last week, and the dollar's future rate advantage has therefore diminished. This has put the U.S. currency under some pressure. Even the Bank of Japan announced during the week that it would cut back on its purchases of 10-year to 40-year Japanese government bonds. Some people think this is a form of stealth tapering, so even the Bank of Japan might be seen as changing its policy slightly. There is one central bank meeting this week, the Bank of Canada. They're widely expected to hike rates. As you can see from the graph, expectations were leaning towards unchanged. That's the purple line. The market put 59% odds on unchanged versus 41% on a hike. But on the 5th of January, that suddenly flipped to 82% hike, 18% unchanged, after the number of new jobs surged and the unemployment rate suddenly plunged to 5.7%, the lowest since the current data series began in 1976. So, the rapidly diminishing slack in the labor market means it's more likely that inflation will creep up over time, and that makes a rate hike more likely this month. Other than that, there are also relatively few central bank speakers this week, and really most of them are people we've already heard from recently. The highlights are probably Swiss National Bank President Jordan on Tuesday and the ECB's Kur on Thursday. The Fed releases its Beige Book on Wednesday ahead of the end January FOMC meeting. Otherwise, the week starts off on a quiet note with no major European announcements on Monday, and U.S. markets closed Monday for the Martin Luther King holiday. Now, the only major indicators out during the week are from Britain and China. Britain will release its CPI on Tuesday and retail sales on Friday. CPI growth in Britain is expected to slow further. That could hurt the pound somewhat, although I think it's generally expected that inflation has peaked, especially as the currency is now recovering, and it's really in line with expectations. As always, any Brexit news will be more important for sterling than the economic indicators. A story broke late on Friday that the Spanish and Dutch finance ministers have agreed to work together for as soft a Brexit as possible. Now that's really big news, because up to now, all of the EU countries, the remaining countries, have presented a pretty uniform front of trying to make things as hard as possible for Britain in order to deter other countries from following the same route. If it turns out that these two countries are going to lobby for a soft Brexit, it could help the pound a lot. China on Thursday releases its fourth quarter GDP figures, as well as the usual monthly retail sales, industrial production, and fixed asset investment data. The GDP is forecast to slow a notch to 6.7% year on year from 6.8%. That might hit the Australian dollar a little bit. We saw a shock to the Aussie after China reported much slower import growth recently, just on Friday. But the fact is, here again, everybody's expecting China's GDP to slow. The government has already announced that that's actually a target for them, so it might not have that much effect. Overall, I don't see much reason for the current trends to change. There aren't many speakers or indicators out during the week to push the market one way or the other. In the absence of any shocks, I'd expect to see the dollar continue to weaken and the euro and yen to strengthen further. Sterling could be the star performer during the week if it turns out that Friday's report about the Spanish and Dutch finance ministers proves to be correct. Although, please note that there are 25 other countries remaining in the EU who may have a different opinion than Spain and the Netherlands. This is Marshall Gittler bringing you the outlook for the week beginning the 15th of January. Thanks for listening and good luck with your trading.